Thanks, Rob. I thought about doing a little series where I show you the NFT, discuss what my artist interpretation is when I crafted it, and then hopefully some takeaways are more meaningful than just reading some text on a medium or trying to fast forward through a 25-minute YouTube video that's teasing you to stay through the ads or clicking through on a podcast. I think it's a meaningful learning exercise to be able to look to an image and then say, okay, my immediate takeaway is this, and now that I have the artist's interpretation of it, my takeaway is this. And it's also a good tool to be able to communicate sometimes difficult concepts in a meaningful way, in a simple way. So I really think that there's a reason why the meme economy does so well, and there's so many fans of memes, and so many communities are just built around memes. Memes as a currency, essentially. They say like meme stocks and these meme crypto tokens. The real visibility is the credibility, which is an old PR adage that I go back to all the time. But in this first one, we're looking at the difference between spot traders and futures traders. So we have the guy that's futures traders, and this was deployed on the day that everything went down like by 30%, some stuff in half. And we saw some incredible volatility, especially for some of the high flyers like Matic, went down to 80 cents and doubled a few hours after that. So it's been a crazy week after the huge sell-off that I think was a reaction to the increased restrictions against Chinese crypto companies. And people have a short memory, but this has been done many times before. A lot of people are saying that this is different, but each time it's different. So and here you see the guy punching his laptop because he got wrecked, or he had his position closed out and he lost all of his investments. Sometimes they even will take a few dollars more if there's a big spread or if people are trading the calendars. So like the Christmas Ethereum as opposed to the perpetual, which is the you're paying an hourly funding fee in order to get that leverage. So it just showed a guy he's frustrated because he leveraged up. Very often he's letting his gains continue to grow, and that's a smart way to do it, assuming that you have some sort of market stop or way to have it readjust as crypto goes up, because you want to lock in those gains in as least aggressively a way that you can, but still you don't want to be left completely wrecked at the end of the process. That's not a good feeling. So this guy is frustrated because he probably, in my narrative, leveled up to 101x on FTX, and he was looking at Bollinger Bands, all the technicals, and he watched a few YouTube videos on how the standard moving lines are indicative of some price movement sometimes, and a lot of people are very confident that something's going to happen with a little bit of information, not understanding that that information is available to everyone. And the smart money that you're trading against, like, they learn that day one of their trading education, and they're 5 to 10 years in. So there's a lot of hubris when it comes to getting a little bit of knowledge and thinking that you know a lot, but not recognizing that unless you have some sort of crazy insider information, you're operating with everyone else who's a lot of times, very smart, but also, bipolar. So when people go up, it goes up quickly. When it goes down quickly. I saw some stat like over the last number of decades, if you concentrated those, let's say even like 45 most active days, you'd amount to the vast majority, like 80-20 of all the gains of the S&P 500. So a lot of these herd movements happen all at once, and the same thing goes on steroids for crypto. So this guy is frustrated because he probably took a lot of the gains that he's been getting that pushed the run up to 2.5 trillion for the market cap of collective bitcoins plus altcoins, and now he's got nothing. So he's frustrated. So he's like, "What's another $1,000 in terms of a laptop? It's going to smash this bad boy, and I'm out. I'm going to go play some golf or something." And then the spot traders, this is like a sophisticate, a guy he's wealthy, but he is wealthy because he understands that it's not the way you trade. No, sorry, it's not what you trade, but it's the way you trade. So with spot, they're not very leveraged, but you can still do a lot with it. Most often, you're either taking a spot position, so you're leveraging against US dollars or Bitcoin. And when you do that, almost 100% of the time, you're borrowing the crypto for cheaper. Half of the big ones you can borrow for less than 1%, as opposed to if you go by the funding rates for a lot of the cryptos, you're starting at 12%, and then you're going all the way up to 60%, 80%. So you're paying a lot more. And then also keep in mind that these spot traders aren't really paying any fees other than small orders to get into it, just nominal fees. The lowest fees that you'll see on an exchange, as opposed to futures traders, they could get 0.03% on a position. And the reason that's done is because people, when there's not as much understanding or not as much capital, there's not as much pushback on the fee side of things. So exchanges are smart, and they know that someone has $100 in Bitcoin and they want to pump it to 10,000 in value, and they don't care, and they expect to get wrecked. And so when they do, they're frustrated, but the fact that we also had to eat, $20 worth of fees on getting in, and then, even more on getting out, the exchange essentially got almost the entirety of that $100. So they're doing insanely well. And that's why I'm bullish on exchanges during these crash periods, because all those forced liquidations come in enormous fees that are beneficial to the exchanges. A lot of times the valuations are high, so they may not necessarily go up right away. But I know like FTX has buyback periods, which are usually on Monday. I think it's like either noon or midnight Hong Kong time. And there's all sorts of ways to time the token buyback or burn, but at the same time, everyone knows about those. Those are known things, and they're factored into a lot of smart money people that are coming in as whales. So, in my narrative, this guy, has a few Bitcoin that he has hedged against the dollar, but he also has some 3x bear tokens. So, when it goes down, then he loses a little bit on the actual Bitcoin, but he'll make it back on the increase in value on the bear tokens, which are 3x leveraged. And those themselves, the leveraged tokens are spot. They're 3x spot, and then they fluctuate as the day goes on because it's a basket of usually dollars and then the actual crypto, and it readjusts every 24 hours. So this guy's he's sipping his coffee. Don't know if it's Irish coffee or normal coffee, but he's in his comfortable chair and he's letting the volatility of the market work to his benefit. A lot of these guys will be hedged and will take advantage of the highest funding rate possible, and will be even milking for that. They'll be getting coins that the demand for them is insane, and they'll be shorting that position. Just like some people will buy GME or GameStop, and then they will put it into exchange accounts like Interactive Brokers, where you can get back some of that margin interest. And a lot of exchanges won't share any of that, like Robinhood, and they're clearing well over $1 billion on the stocks that are in there. And that's a hugely profitable model. That's why the push to have zero fee transactions on a lot of stock trades has done so well, because the fees on the short positions, if you push people in the direction of speculative stocks or commodities, but usually stocks, and they're actively lending them out because they're in a margin account, you can make an enormous amount of money, and exchanges certainly do, and it leads to huge valuations in a short period of time with just a simple app or user interface that can be easily duplicated. And then it's just a little bit of PR and bots that create the narrative out there. And then anyone that criticizes, send a cease and desist. which has been the pattern for a few broker-dealers that I've seen out there, pretty visible these days. So in my narrative, the takeaway is that if you can, I know it's less sexy, but try to trade spot. There are ways that you can do it that are strategic. It'll take longer if you're in the right direction on the market, but at the same time, you're going to lose significantly less. And it's just a smarter way that bigger traders play. And then they level up their earnings, and then before you know it, become whales. And then they get to the position where they wanted to get to by being a futures trader, but are doing it in much more of a calculated way and much more of a savvy way that is the opposite of the herd, which just go in 100x long and then cross their fingers, hope and pray. So feel free to subscribe to my channel if you enjoy this NFT or commentary. I'll be doing some airdrops, so feel free to put in your XDAI address or really any of your Ethereum virtual machine addresses. It's the same for whether you're on Harmony One or BSC or Ethereum mainnet, XDAI, Polygon. We used to be Matic. So you can just put it in there, and I have some airdrops coming up. So thanks for checking out the channel, and give me a little bit of a thumbs up and like. Follow me on @Rekt, @REKT on Twitter.